Har Rai, thanks so much for coming on the show. Super excited to talk with you about what you've been doing at SwayStack. You've been on a tear, 15 customers in 1 year.
16 right? As of yesterday. Yeah, 16th was signed 16. Yesterday.
Man, congratulations.
Thank you, sir.
That is crazy growth that you rarely see. But you guys are playing in what seems to be kind of like a new space. Do you want to shed some light on what you guys are doing?
So what we identified at SwayStack was that a very healthy portion of the accounts that were getting opened were ending up going unfunded. They weren't receiving recurring direct deposit paychecks. They weren't receiving utilization. And ultimately, our early interviews when we were just starting to work full-time on the project, call it April of last year, folks said it's very important that you focus on helping us get active utilization of the products once they come in, because we're just seeing them go dormant, inactive. They end up weighing us down, and it's a cost that's unseen because we're so busy. Go ahead.
What does like the customer acquisition cost look like for each one of those clients that walk through the door?
You know, for checking account, we've heard between $400 or $500 acquisition cost, $400 on the low end, $500 on the high. But I would say if you're buying loans from, a public lender or from an indirect lender, you're going to have different fees that you're paying for those loans.
Okay, that's significant. And I've heard that around 40% of these go dormant.
Yeah. I mean, on the lowest end we've heard is like 25% inactive accounts. We have one institution that signed up with us that, was pushing upwards of 55 to 60% inactive accounts. And so these are accounts that get opened. Yeah. They maybe get funded with the minimum to open the account, and then they just sit there. No recurring inbound deposits come in, therefore no outbound debit card transactions or ACH wire transactions take place. So it's effectively the financial institution paying the core and the digital banking companies, and usually the paper statement companies, for a dormant relationship. And, the only person that's really benefiting there are the software providers, I would argue.
Sure. So is this a scenario where people bag the $200 incentive, and then they basically are kind of off on their merry way, staying with the same provider, not making the full migration?
It's a great question, right? So if you look at the reasons why somebody would open an account and not use it, let's start with why they might open an account. Maybe they moved to a new town and they want their dollars, local, or maybe they went through, a relationship challenge and they're splitting finances. Maybe they had a really bad experience with a financial institution and they said, I'm never doing business with them again. Or in your example, they had an intro bonus that was mailed to them or they saw on the internet, and it was just too much to pass up. Oh, that's all I have to do to qualify for that. Our generation, Roland, became famous for being churners, getting all the credit cards, spending a couple grand, and then, getting the $1,000 bonus. And then we're on to our next vacation, getting the next credit card bonus. So when you think about reasons why somebody might open an account, then it's like, okay, why would it not get utilized from there? The simplest, and it's almost unbelievable, is it's just really hard to switch a primary banking relationship. First, you have all of your deposits that could be distributed in different institutions. Second, you have where you're receiving your paycheck or your income from. How are you going to move over that direct deposit so you don't miss paying the auto loan or the mortgage or the personal loan? Third, you have all of your card transactions or subscriptions where you're actually putting your cards on file with, think Amazon or think, Netflix or wherever you're spending your money.
You're in deep. You're in pretty deep.
Yeah, let alone all the accounts that you've linked to digital banking for either peer-to-peer transfers or certain vendors that you're kind of paying out through your digital banking through ACH. How do you move all of that over? When 1033 doesn't yet let us pull that data from the financial institution of payees and their account and routing numbers and the monthly payment schedules, right? One day we'll be able to get all that.
So really quick, let me draw you out. 1033, do you want to just give us a quick blurb on that for those who may not be familiar?
Yeah, I mean, I think the simplest way I understand it is that, the consumer who's banking with an institution should own the data pertaining to their banking, whether that's their transactional data, be it how they're spending their money or their payees and how they're, paying people for jobs or services that they're doing for them, or even just sending money to a family member. So I think it's more or less like a simple profile that could be exported from bank to bank, allowing somebody to resume their financial life with the new institution. I think there's a lot of beauty to that, like how the data is structured and who
Sure.
provides the pipes and all that, that'll play out over time. But yeah.
So I feel like a natural transition to, to that topic is open banking, similar type of scenario where as the world moves along, that concept will be embraced here stateside.
I think the limiting step here is almost more the software providers than it is the financial institutions. How quickly can Fiserv, FIS, Jack Henry adapt to these new regulations
Sure.
or standards? So I think it's the limiting step in that is probably less the banks and the credit unions than it is their technology providers.
Sure. Yeah. I mean, it's probably it's a double-edged sword, right? If you make it easier for people to come and go from your institution, if you're doing a great job, you'll attract and retain. If you're not doing a great job, then you'll hemorrhage clients and deposits.
Yeah. Yeah. I mean, if you look at the different examples of open banking and onboarding, there's linking an external financial institution to draw the deposits from that institution to the next one. There's linking your payroll system or your employer, where you get your W-2 pay stub, where you get your income and your employment history, right? That you can use to prove credit worthiness. There's the merchants, the retailers, where you're spending your money, where you have your sensitive payment card data on file, right, transacting at risk of being exposed and used for fraudulent purposes, right? So there's these different use cases we're seeing open banking play out, Roland, and I think, you're starting to see this in the digital wallet space, and put my ID or my passport in the digital wallet and have my digital identity that I can share. And so it'll be interesting to see how it all ties together, but I think it'll probably end up centralizing around the mobile device and some type of digital identity that can authenticate the device, and the person to do different financial transactions with limited friction. I think that's really where we'll go.
Yeah. Yeah, you're just reminded me. I was coming back from a comedy show with just a group of our friends. We're all in the car, and one of our friends had full-blown compromised card situation where she got, the classic phishing scenario, clicked on the thing, she entered her information. I mean, they got her. And I said, oh my gosh, well, please tell me that you switched all your card information. And she said, no, I haven't. It's such a hassle to do it. And so far, I haven't seen anything bad happen yet. And I'm just going, oh my gosh, like you don't know what you're doing. But I mean, that friction is real. And, this is just like one anecdotal scenario, but I mean, extrapolate that across the US market. And I mean, that's happening. I mean, people are,
let's take a case,
sticking around longer than they should.
Let's take a case where it's not just fraudulent, but it's actually the institution hypothetically is changing their card processor who's going to have the new system of record to show the card and who it's associated with and how it's transacting and do the statements and the payments, et cetera. But to switch from one card processor to the other, the financial institution is now reissuing new cards to all of its customer members. And so now all those people are being forced almost to have a new card with new information. And so now they have to update that. So yeah, these are examples of why somebody might leave an institution if they're forced to do something that they didn't want to do.
Yeah. Let's talk a little bit about primacy. So, for people who aren't familiar with this term, what do you think this means for banking institutions, primacy as an objective?
Yeah, it's interesting because when the first direct deposit switch providers were kind of coming to market, that's where I think the concept, these thought leadership terms come up with products that are selling the concept to market. And so I think the initial pitch, Roland, was primacy is the direct deposit relationship, because if you get the recurring inbound deposits, you're going to get the person paying their bills, going to the grocery store, generating non-interest income or interchange income. And that's great for a transactional checking account. The more likely person to take your loan products is the person who's giving you their spending behavior on their debit card, et cetera. And so I think that was like the common definition of primacy. We're hearing a lot of folks question that, and it's interesting. And I think it's because credit unions and banks have a lot of loan products. If you look at that definition of primacy around direct deposit in isolation, what if the people that came up with that positioning were selling primarily to neobanks, who could only have checking accounts on top of, web bank or whoever. So they were
Sure.
in an interchange income business. So the folks creating the product to sell it into the neobanks came up with the positioning. Now the question is, does that definition, Roland, apply to traditional banks and credit unions who have credit products where they can have interest income? And is primacy actually a byproduct of the direct deposit relationship or the number of products within that portfolio for the customer? So we're hearing these diverging definitions, Roland. There is, people questioning whether direct deposit is that definition of primacy, or should we look more towards the number of financial products they have with us? I think there's risks in each definition, but we usually just try to understand each institution's definition. Because at the end of the day, each institution has found their own special sauce and their own way of doing
Sure.
business, their own niche, their own, secret sauce. And so we
Right.
try to understand that. So when we come to implement software for them to solve their business challenges, it can be in alignment with their strategy and with their business model.
I love that. That's a great way to think about the kind of the paradigm around primacy and what people are focusing on and what's critical to them. I think ultimately, and this isn't, the end all be all, but deposits and cash flow is great. And it's kind of the kryptonite to the neo banks or the challenger banks, right? Because having access to capital like that is just such a huge, huge strength. I want to talk a little bit about what you did before and get some perspectives on the personalization during the onboarding experience. You had an account origination product that you guys ended up selling to Alchemy. You guys did great in the market. You know a lot about that space. Is there much room for innovation before new legislation comes around?
Yeah, I last heard a count of 35 providers in the space, and it seems like they've all raised, 15 to 20 million on up to 80 to 100 million, or been acquired for hundreds of millions. So I think there's a lot of competition there. I think it's fair to define that as a red ocean. There's a lot of people competing to try and displace Meridian Link and to try and find the offshoots of the Origins or the Encino of the market. And so when you think about that part of the market, there's really only two ways that you can expand it. Either you expand by going into other financial products, meaning you go from, hey, I'm an account opening system to now I'm a business account opening system, or I'm a loan origination system, or you kind of expand towards where SwayStack is as a onboarding and engagement platform, where you're saying, hey, we think that we have to take more responsibility for the success of these accounts that we originated or these loans that we originated. So I think those are kind of the two ways that you could go. If you try to go both, it's a lot of product. I would argue that trying to compete across, all of the consumer accounts, consumer loans is already a lot of product. Meridian Link, Origins, pretty strong in that swath of product. What we've seen recently, Roland, is people say, okay, I'm going to be the best of breed for account opening, and it's going to be fast, and it's going to be automated, and it's going to save you time, energy, and resources, plus increase application volumes, right? And deposits. So we'll continue to be entrants because we're continuing to see exits. And when you see exits, you're going to see entrants, Roland. So I think it's that simple.
Fair enough. So last question for you here. If a bank leader, credit union leader is listening to this and they're thinking our inactive account situation is definitely a problem, what would you say are the first and second kind of levers that they should pull to start trying to solve for this?
Send a welcome email. Just tell people welcome to the institution. And then from there, be very thoughtful about what are the 5 to 7 actions that you really want these people to take. But before you can get to 5 to 7, you got to come up with the first one. And so traditionally, we've seen it as downloading the app or getting into the app. That's usually the first thing we're trying to get the person to do. But even if we drop them off there, what journey are you taking them on? How do you create an alignment of interest between the customer and the bank? And I think the alignment of interest is where we're seeing a lot of folks move, Roland, towards these either interest-bearing checking accounts or introductory promos where the institution saying, hey, if you will behave in this way with your banking behaviors, then we're going to actually give you incentive to do that, whether that's you're swiping the card 10 times a month, so we're paying you 5% on your checking account, or it's you're bringing in your paycheck, so we're giving you a $300 bonus. I think the institutions are starting to align the incentives in a way that we've really only seen on, credit cards in a big way, because the interchange income was something that could be theoretically participated to that cardholder. And so we're seeing a little bit more
like
of that.
cutting them in on the deal. Hey, we're making money on your transacting. Let's share in the profits.
Exactly. So we're seeing
idea.
that in terms of like an interest paid on the balance in that checking account. For example, if you had $20,000 in a checking account and you're using your debit card actively 10 times a month, then we'll pay you 5% on that 20K. And so they're paying you a yield, which is newer. It's a newer concept on the checking account.
Love that. It's dynamic. Are you hitting your transaction count? Is your balance, do you want your balance to be higher because you're going to make more money?
Yeah. So I think that, we would advise people to first start communicating with the customer immediately if you're not, and then think of the key actions you want this person to take. Take them on that journey, walk them through those actions, make sure they're doing those things. And then third, if you can bring an incentive-based product to the market where you can actually start selling rewards or yield on your checking deposits, that's a differentiated approach that I think can earn good business in the coming years, actually.
I know I said I had one last question for you, but I lied. I have one more actually that I just thought of. What is something that you would love to see bankers do that doesn't scale, but is powerful for their business? If anything, it's kind of a weird question, but.
No, it's a great question. Yeah, I think the number one thing is before they leave the branch, make sure they don't leave without getting into mobile banking. I think that's number one. I think everybody can agree that somebody who adopts the digital experience is more likely to use the digital experience. Where we would then take it one step further is walk them through a personalized onboarding guide in digital banking before they leave the branch.
Love that.
So give them
That's
the walkthrough, give them, kind of the coaching up on how to make the best use of this account. Don't just open it for them and let them walk away, because if they don't have their card, if they don't have their mobile banking app, then you're at risk of losing them because of some flashy object.
Well said. Love that. Well, Har Rai, thanks so much for coming on the show. Where can people learn about you guys and SwayStack and what y'all do?
Yeah, SwayStack.com, always available for discovery calls with banks and credit unions alike. And yeah, talking to about 30 folks a month these days. So quickly picking up awareness in the market. And yeah, working on a couple new digital banking integrations in 2026. So expanding our opportunity quarter by quarter here.
Awesome. Love it. Thanks, man, for coming on the show.
Thank you so much, Roland. Appreciate you, sir.
Hey, thanks for being here. If you or someone else you know would like to explore coming on the show, fill out a contact form at propagatefintech.com and we can explore some content ideas with you. Also, we are an end-to-end marketing and PR firm only supporting the bank industry. So if you would like to explore going deeper with Propagate, again, feel free to reach out to us and we can explore whatever that you are working on. See you on the next one.